What is going on, guys? So in this video I'm going to be going over why I just picked up some shares in the portfolio here for the channel in Pepsi, the inverse ETF for emerging markets, and Nvidia. Now, so those of you that have been following my channel, Nvidia especially has been a company that I've spoken about for a few times now. I mainly think that I believe Nvidia is an amazing company. They make amazing products, best graphics cards out there, and the market will only be growing into the future. But I have said time and time again that Nvidia is generally priced too much, for my liking. I think that, the capital can be used in other ventures and other, companies that I think will grow at a faster rate than Nvidia will be in comparison. But that kind of changed a little bit over the past couple of days. So, again, I've been harping about, making sure people are prepared for a recession, making sure people, they understand that tech stocks from here on out could get extremely volatile. They're already volatile enough as it is. But, we might have said goodbye to, those amazing returns in the tech space. That being said, I am a tech investor for the long term. And while I've been piling cash anyways, I'm willing to deploy some of that, not a large portion of it, but at least, 5% or so of that cash into a company like Nvidia, like Pepsi, things like that I think are realistic values. And assuming that, say, the market does go up for another couple of years, I think these companies will do well in the meantime. Pepsi will do extremely well, even if, we don't, have a great market for the next couple of years. That's a little bit more defensive pick. But anyways, Nvidia is something that I just kind of wanted to go over in a real quick notion. Now, I did do a video about Nvidia over here. I'll link to it if you guys want me to do a more in-depth, video explaining Nvidia and really where I see the company going. Just let me know in the comment section down below, and any other company you want. So, Nvidia is a really interesting story. Nvidia has been on fire over the past few years. It's gone up. If we look at like, say, the monthly chart, Nvidia has gone up, I believe, over 10x in just 3 years or so. So this company's been on fire. People didn't really realize, at least Wall Street didn't really realize, how important graphics cards are, for all of technology and all for, the progression of the majority of industries. And now Nvidia is finally getting recognition for what it is. However, there's two sides to that. Nvidia might have gotten too carried away, but I'm going to kind of explain why I don't think that's the case, at least not right now. So, Nvidia, if you look at it over the past 5 years, its EPS has been growing at a 38 per annum rate. And so that's really good. That's it's kind of in the sweet spot for a growth investor, because you don't have, above 50% per year, making it unsustainable. While at the same time, you have it above 20%, so that way the company, is going to be attractive and can potentially continue to grow into the future. So it's really great. And right now, its PE ratio, after its recent, 20% decline over the past week, or 2 weeks now, it's sitting around a 35. Now, if you go back a month or so ago, before a couple of earnings ago, Nvidia's PE, I believe, was around 50 to 60. So the fact that it's come down to earth, this much in such a short amount of time is really great. Like, I would not have invested in it when it was at a 60 PE, but now that's at a 35. And people are relatively, bearish on the earnings growth for the next couple of years. So if you look here, the estimates over the next 5 years are 17%. And here's my opinion on that. With most semiconductor companies, but especially Nvidia and, like, say, Micron, if you invest in them, you're pretty much banking on the market doing well for as long as you're invested in them. At least if you want, say, them to go up. Obviously, in the long term, there's no doubt in my mind Nvidia will be worth way more money than it is right now, because I think we've only just begun really tapping into AI. AI is a big buzzword that people just throw around, but AI, as it stands right now, if you've ever worked with it, isn't realistically that special. Nothing, like, AI is extremely useful right now, but we are, like, only at the tip of the iceberg for as far as how far AI can go. And so I believe AI is going to be in a significantly bigger and more important industry than it is right now, 5-10 years from now. And you're going to need the best graphics cards and the best processors in order to do that. And Nvidia's just happen, to fit the bill, at least for right now. AMD could surprise us, but for right now, Nvidia, time and time again, and especially with their new graphics cards, create the most powerful and most efficient graphics cards that we can get. And I'll get into that in a minute, that also might kind of be a reason why Nvidia is dropping right now. But anyways, so definitely the future outlook for Nvidia is, stellar. And, you know, whether there's a correction or not, I will be buying Nvidia during a recession. I'm not going super, you know, into my position with Nvidia right now because, yes, I'm very cognitive of the fact that we are near the end stage of a cycle, but Nvidia is a company that I will be buying pretty much no matter what. It has little to no debt, so I don't have to worry about it going bankrupt. I personally believe that everything's clear for Nvidia in the long term, and I do believe that the majority of people that are in Nvidia right now will sell out, you know, when there is a market correction. And so if the stock price drops, say 70%, and, you know, my small position right now goes down by 70%, I'm not that worried because I'll be aggressively buying it, say that there is a downturn. So those are kind of like, you know, quick things going on right now with my person looking at Nvidia right now. And so if you look at their PEG ratio, right now, because of the low EPS growth that is expected over the next 5 years, it's sitting around a 2. If you know, backtrack that and you look at like what has happened in the past 5 years, you know, it's sitting below a 1. And while there's no reason why, you know, past performance is a good extrapolation of the future, I do believe, you know, based off of the fact that if we continue to be in a bull market, people are going to continue to expand their markets, people are going to continue to expand technology, AI is going to get a lot more money put into it, autonomous vehicle research is going to have a lot more money put into it, and all of this bodes well for Nvidia. Nvidia's newest graphics cards also, because they do ray tracing, are also being brought into the special effects market. And what the CEO and the CFO went over in the last earnings call and kind of explained that this market is a $500 billion market that Nvidia now has the ability to really capitalize on. So, you know, if you look at Nvidia's market cap right now of $147 billion, taking any percentage of a $500 billion market will significantly boost the company in the long term. And I only think the amount of industries that are going to be using, you know, graphics cards and things like that, being coupled with, you know, AI, machine learning, cloud storage, anything like that, I think all of those will bode well for Nvidia. But this is just another market that just opened up, and it'll be really interesting to see how much, you know, market cap that translates into Nvidia. And so I would definitely give, you know, in my opinion, I would say Nvidia has another few years of growing at, say, 30%. So in my opinion, I believe the PEG ratio is justified, accounting for what has happened and what I think is going to happen, and I do not agree with analysts in this regard. Could be wrong, and that's why it is a relatively small position, but I believe that right now Nvidia is a monumental growth stock that just got mispriced in all the selling. And that's mainly, again, I've been saying this for a while now, when people start to freak out, people start to sell, growth stocks get hit the hardest, and you have to understand that. But, you know, if you're bullish on growth and you're bullish on the economy, you know, whether it be in the short term or in the long term, buying growth during a sell-off will do you amazing once it rebounds. So that's kind of like just a quick overview of like Nvidia. I think, you know, is truly mispriced right now. So say, for example, if you look at the weekly chart, you know, Nvidia has just been on fire, and then all of a sudden it had a massive sell-off this past week along with the rest of the tech sector, and it is just hitting its 50-day moving average on the weekly. Now, when you look at the weekly chart, and I know, again, not a lot of you are big on charts, I'm relatively new to them myself, but when you look at, like, say, a weekly chart, that's generally for people that are, like, looking for very long-term positions, and, you know, that's looking for people that are looking a few months to years out in advance, not necessarily, like, say, someone that's looking at a daily chart or an hourly chart or things like that. You know, they're only looking for, like, you know, a quarter or two. The 50-day moving average on the weekly chart for Nvidia to be hitting it and then possibly bouncing off of it, I think that is a very bullish sign for going long, mainly because, again, this is kind of the sentiment with the market. I believe that the market, you know, while I do think the market is overvalued, I don't think it's overvalued to the point where the recession should come immediately. We are, you know, like, we're historically very high, but Nvidia is not one of the companies that I'm worried about, say, getting wiped off the face of the planet. If you look at, like, say, Tesla, I'm very worried for Tesla because, you know, I'm extremely bullish on, I want Tesla to succeed, and I'm very pro Tesla and Elon Musk, but unfortunately, if we get hit with a recession, that company will probably go bankrupt, unless Elon Musk dumps all of his money into it and keeps it afloat, which, hey, he's worth, I think, $22-something billion. He could possibly keep it, you know, keep the doors open until more funding comes in, but I definitely am afraid of Tesla, you know, going to zero And I'm not at all afraid of Nvidia going to zero because, you know, there's, with the gaming industry going the way it is, with cloud going the way it is, with AI going the way it is, with the possibility of autonomous vehicles, there's no reason in my mind why Nvidia will not be sought after in the future, and why, you know, when these markets are actually to fruition and not just theory, which most of them kind of are right now, I could see, you know, Nvidia being 4 to 5 times bigger than it is 10 years from now. So that's the main reason why I bought Nvidia. Just to do Pepsi real quick. So Pepsi, excuse me, is a, you know, is a kind of interesting stock over the past year. So Pepsi, you know, is a dividend aristocrat, is one of the biggest consumer staple companies in the world. I personally prefer it to, say, Coca-Cola, and that's mainly because, like, I'm looking at, when I look at companies like Pepsi, and I look at, say, a company that probably isn't going anywhere anytime soon, and a company that's been around for, you know, decades upon decades, and I think it will be around for, you know, next 40, 50 years. I try to look at consumer trends and where those staples are positioned. And so Pepsi, like, say if you take its direct competitor Coca-Cola, Pepsi is diversified amongst food, and especially now in the recent years has been dumping a lot of money into healthy food. And if you look at, like, say, the average millennial is becoming much more conscientious of what they're eating, what they're consuming, and, you know, what other people think about that. A lot of that has to do with social media. A lot of that has to do with the fact that we've been in a good economy for a long time, and people generally, you know, prefer to work out and eat healthier, and, you know, they'll pay the extra few cents for the more premium product that they'll put in their body than they do in a recession. But I do think that mainly because of social media, millennials have a lot of vanity, and I do think that they're going to be going for, you know, say, the healthier alternatives to just buying chips and things like that. So, like, you know, Quaker Oats, Gatorade, all things that relate to a healthy lifestyle. You know, as far as Pepsi goes, I think that that's what is going to be driving millennials for, you know, say if things are good, millennials are going to go towards Pepsi more towards, you know, what Pepsi's currently putting into their portfolio as opposed to what they used to. So I think that's a smart transition. I definitely think Pepsi soda brands are more popular amongst millennials, and that is mainly because of Mountain Dew. Mountain Dew, again, with the whole video game industry going up, I believe Mountain Dew, and I've actually done, you know, there have been, believe it or not, I've done a couple of things relating to schoolwork as far as surveying people that are under the age of 30 what their favorite soda is, and the majority of people said Mountain Dew or some variant of Mountain Dew was their favorite soda. And so that's kind of interesting to me, because, like, you know, to me personally, if you just compare, say, Pepsi to Coke, I'm relatively indifferent, but if I'm saying going to pick a soda, normally it'll actually either be a Dr. Pepper, or it'll be, you know, say, a Code Red. And a lot of people, you know, feel that way. And between the deals between Mountain Dew, and they also own Doritos, between Mountain Dew and Doritos and, like, say, Activision, whenever a new Call of Duty game comes out, I definitely think sales are going to be boosted for, you know, Pepsi for the foreseeable future. And I just think that the recent sell-off, actually both of the recent sell-offs, have been kind of unjustified for Pepsi. You know, it's a relatively slow-growing stock, but it's been going down, you know, from its first high to its trough, it was down about 20%, and from its most recent high, it's down about 10%. And this is a company that pays, like right now, I think it's a 3.7%, so 3.5% dividend, $3.70. And it continuously pays it, and it continuously increases it even during a recession. So that's pretty good flow of income. I think it's going in the right direction as far as consumer trends. That was mainly due to their previous CEO, Ingrid. She just left, but, you know, the new CEO that just replaced her, she seems to be kind of going on to those same, you know, principles that are being held to her, and they both also focus on shareholder value. So it'll be interesting. Only thing to keep in mind is that their payout ratio, due to a couple of issues going on with taxes and earnings and things like that, payout ratio is at near 100 right now. On average over the past few years, according to Seeking Alpha, it's been about 74, which is kind of standard for, you know, the dividend aristocrats. You know, they're not growing anymore. They're just kind of trying to stay relevant and make the same amount of money they make every year, you know, and adjusted for inflation. And I definitely think Pepsi can do that. So with Pepsi, you know, going down 10 or so percent off of this recent sell-off, I definitely think Pepsi is a smart, you know, hedge, I guess. You know, it's It'll give you some income if things go well, and if things go poorly, it shouldn't crash as much as the rest of the market due to its nature, while giving you that steady cash flow that you can use. Like, so for my opinion, the steady dividend based payers that, you know, like, are consumer staples and non-cyclicals that I own, I'm pretty much taking their dividends, and instead of during a recession putting them back into the stock, I'm taking their dividends and putting them into growth companies that I think are, you know, destroyed by the market when it goes down, just because that's the nature of tech. So for example, you know, we fast forward 5 years, and say if I own Pepsi and Nvidia in my stock portfolio, Pepsi will go down, you know, 20-30%, Nvidia will go down 60-70%, and I'm just going to be taking the dividends from Pepsi and putting them into Nvidia, and then hopefully by the time that the market rebalances, Nvidia, you know, will continue to come out on top and will be at a premium, and I was able to buy, you know, the standard shares I planned on buying anyways during the recession, and then even more shares by transferring the dividends from Pepsi into Nvidia. So that's kind of my, you know, just quick look at the markets. I did also buy, around open today, I bought a couple of more shares of the inverse ETF against the emerging markets, and that's mainly because I still think things are going to be very volatile. I looked at the markets today, and everything was up, you know, a couple of percent, especially like I think Baba and Tencent were over, you know, 4 and 6% each. And I think a lot of that's because a lot of bulls are very like, oh my god, it's such a good deal, pull all your money into it. But if you looked at the volume was extremely low. And so that just means everybody was buying it, but there weren't a lot of people. So it pushes up the price, but the whole market is still relatively on fence of whether they want, you know, this bull market to continue or not, or whether we're going to trade sideways or not from here. So I just thought it got a little bit ahead of itself. You know, if I were saying going long on the Chinese, you know, market or just emerging markets in general, I would have preferred it to, say, go around flat with a good amount of volume. I would have preferred that. That, to me, would have been more a bullish indication that, you know, people are kind of, like, settling down and be like, okay, that correction was all we needed. So who knows? I definitely think, you know, the market going down another, like, say, 5-10% or so is completely in the cards. You know, I would not be surprised if we really test this level right here in the 50-day moving average. If we go on the daily, you know, we're really bouncing around the 180-day moving average, and I would honestly not be surprised if we just kind of float around between the 180 and the 50, or the 200 and the 50 for a while until we decide whether we're going up or down. So that's just kind of my 2 cents on the market. Again, doesn't really matter. No one can time it anyways. That's just kind of the way I'm looking at things. So I hope you guys got some use out of this, and I'll catch you in the next video. Peace.